Welcome back to Money Otter. I'm Alice. Today we have a new buzzword circulating, ABC, or All In by China. We will have deep dive on it after we update the latest statement from Fed Chairman Powell.
And I'm Benjamin. Fed Chair Jerome Powell had hinted that the recent half percentage point rate cut might not be the norm going forward during a speech on Monday in Nashville, Tennessee. Remember, at the September FOMC meeting, the Fed lowered rates by 50 basis points, the first easing in 4 years, so the market has been anticipating similar moves.
Perhaps Powell is trying to manage market expectations, ensuring investors don't get overly optimistic about future cuts. The Fed doesn't want to fuel excessive optimism and trigger another round of inflation. He suggested that future cuts will likely be smaller, closer to a quarter percentage point.
It's a delicate balancing act for policymakers. Speaking of that, did you see the latest news out of China? They've unveiled a new stimulus plan to boost consumer spending.
Absolutely. They're lowering reserve requirements for banks and reducing down payment requirements for second homes. They're also injecting a massive 800 billion yuan, that's about 114 billion US dollars, into the stock market. A big surprise, a new move.
It's a bold move. The People's Bank of China is hoping that these measures will encourage lending and investment in equities. The policymakers likely want to use stock market rally to boost the consumer optimism in order to improve upcoming China holiday season spending.
And the market seems to be responding positively. We're seeing a surge in interest in China ETFs, with some posting significant gains. For example, the iShares MSCI China ETF was up about 22% last month, while the Crane-shared CSI China Internet ETF saw a massive 32% gain.
There's even a new buzzword circulating called ABC, or All In by China, instead of All But China a month ago. This stock market stimulus plan is similar to what other countries' central banks have been doing. If the global funds flows into China market, it will create a positive feedback to the stock market and likely will sustain the market.
But before we all rush to buy China, we should remember that the Chinese market has a history of these bursts of activity, followed by correction.
You always have to be cautious. I'm personally allocating a small portion of my portfolio to Chinese stocks, but I'm keeping a close eye on upcoming economic data and foreign fund inflows.
That sounds like a sensible approach. Thanks for joining us today. Don't forget to subscribe to Money Otter for more insightful financial analysis and updates on the global markets.
And don't forget to subscribe to Money Otter for more insightful financial analysis. Until next time, invest wisely.